Hello, good morning, everyone. I'm Sherman. I will be your moderator for this panel discussions. Now, we all know that buying individual stocks will allow you to make a focused investment in a company or business which you really believe in. However, in contrast, most ETFs may help reduce risk and also give investors a way to so-called diversify with lesser money involved, as well as gaining exposure to sectors, regions, and also broader markets more easily. Now today in these sessions, this is a panel discussions where we already have 4 panelists online. We have Shyu from Bursa, all right, Ong from i-VCap Management Sdn Berhad, Yiwa from Funds Management Berhad, and also Choo from Affin Hwang Asset Management Berhad. So welcome to all of you. All right. So finally, we are already in this panel discussion sessions. Now, from 9 a.m. until now, we have received a lot of questions towards all the speakers regarding ETFs. Right. So at the very first place, before we move on into all these questions, now I would like to hear it from Shyu from Bursa. From a point of view as a regulator, where do you see ETFs in Malaysia's landscape? How big would they be in the next 2 to 3 years? Is there any opportunities for investors in Bursa, Malaysia, in terms of ETF investments? Shyu, over to you.
Thank you, Sherman. Yes, definitely we hope ETF can be a mainstream investment for everyone. As you can see, unit trust is currently quite dominant. A lot of people invest in unit trust, and they are very familiar with unit trust. But when it comes to ETF, not much, because I guess it has to do with the distribution model here in Malaysia, where unit trust, you have the banks, the agency model, where they reach out to investors, and these are very well established models. But for ETF, we only have the brokers and the fund managers themselves actually doing the promoting activities, reaching out to the investors. And now we have FSMOne on board. But we definitely need more work done to educate investors. And we want to see more institutional investors in this space. And from the ETF managers' part, they also do increasing the product range in terms of breadth and depth, so that investors have more options to use ETF to express their investment view. So hopefully in the coming months, years, that we will see more ETF listed in Bursa, quality products that most investors need.
All right, thank you, Shyu. So just now, because I was looking through the presentations from Choo earlier, and also from Ong earlier, in Malaysia, there are only 19 ETFs, when at the same time we are comparing with other foreign exchange markets that they have about close to hundreds or thousands of ETFs available for investors. Of course, so we understand that just now you have mentioned there will be a campaign when it comes to ETF cashback. Would you be able to elaborate more for our audience today?
Sure. Okay. So starting Monday, let me just pull out slides. Starting Monday up until end of July, we're going to run an ETF cashback program. So what we'll do is that for the first 300 eligible investors who invest one or more Bursa listed ETF with a cumulative value of 2,000 ringgit or more, they'll be eligible for 100 ringgit touch and go e-wallet reload pin. So this will be coordinated with brokers as well as even FSMOne, and the purchase investor who purchase this ETF and this criteria, they will receive this e-wallet reload pin at the end of the campaign.
I see. Okay. Thank you, Shyu. Thank you very much. All right. Now, I have questions for Ong. When it comes to ETFs, do they pay dividends? If they are paying, how frequent are they paying all these dividends for our investors?
Okay, thanks for the question. Generally, for equity ETF, they do pay dividend, and generally it can be annually or semi-annually. For the ETF, for the equity ETF that issued by under Kenanga, we do pay dividend once a year.
I see. So is the dividend is going to reflect on the ETF share price, or it is going to be credited to the clients?
Yeah. So the dividend paid will be generally in cash, will be credited to the account bank account of the all the investors, and the price will be reflected in the NAV price, in which the NAV price will be adjusted accordingly on the X date. It will be quite similar as the any of the shares that you buy, that on the X date of the dividend day, your share price will adjusted accordingly.
I see. Okay. All right. Thank you, Ong. Now, Lee Choo, I have questions for you, because just now you have made a very good presentation when it comes to explaining the dynamics and also the mechanism when it comes to ETF investments. Now, a quick question: does ETF expires? Would an ETF go bankrupt? Because this is the most, I would say, common, frequently asked question by the investors. How safe, the ETF is in Malaysia landscape?
Thanks, Sherman. I think for the first question, whether or not ETF has expiry date, the answer is no. So all ETFs are open-ended. So unlike structured warrants where it has an expiry and then it might expire worthless, so all ETFs does not have an expiry date. So if you have been monitoring the leverage and inverse ETFs, the leverage and inverse ETFs invest into futures contract, and the futures contract has an expiry date. So when you invest into the ETF, the fund manager will help you manage and do the rollover accordingly. So in other words, the underlying investments that we invest in potentially could have an expiry date, but the fund manager will manage that for you. And then the second question is in terms of whether or not an ETF can go bankrupt. So the answer is, I guess, yes and no, depending on what your definition of bankrupt is, right? So first of all, the ETF can never go bankrupt like a company, but it can be delisted. So just like any unit trust fund in Malaysia, there is that potential where we can wind down or terminate that fund. So in the event, if let's say, for example, the theme of that particular ETF is no longer, current, it's outdated, and it may have been gone with season, then there's that potential of the fund manager wanting to delist a particular fund. So when delisting happens, as an investor, you get back the NAV of the fund, so you don't get back like zero, unless of course the underlying companies within that particular ETF all goes default at the same time. Then that the bankruptcy thing will kick in.
But definitely the possibility for an ETF to go bankrupt is very minimal from your answers, right?
Yeah, I would say so.
I see. Great. Now, I would like to ask Iwa. So just now, some of our audiences, they did post some of the questions saying that what kind of mindset do I need to have before buying an ETFs? If let us say if I'm a conservative client, balanced client, or aggressive client, how would ETF add values into my portfolio? Iwa, I would like to hear it from you.
The simple answer to that is if you buy into ETF, you don't have to make a decision on what are the underlying instruments that make up the ETF. You just need to understand where you think the market is going to head to, right? So say, for example, if you like China A shares, right? You think China A is going to do very well, or if you think Malaysian bond is going to do very well, and you don't know what shares to buy, or you don't want the headache to know what shares to buy, you just buy this ETF, right? So you have two options. One, you buy the ETF, which gives you a cheaper entry, right? Because the fees are a lot lower and you don't have to pay upfront fees. Or you can buy an active funds, a unit trust. So these are some things. This is just another alternative instrument for investors to make their life simpler.
I see. Now, so you were saying that, if you were to, investing into an ETF is actually way more passive and is more hassle-free, and it kind of complementing everyone's investment portfolio. Now, I would like to hear it from Ong, from i-VCap. Now, where do you stand in this ETF will be able to completely substituting unit trust, or or they are complementing each other? What is your stance on this?
Okay. So our view on this ETF and also unit trust is that it is complementing each other. So just now I have shared a few comparisons between ETF and as well as unit trust fund. And to me, unit trust fund and ETF are two different asset class, and it is different. It is based on the demand or the needs, financial needs of the investor. Depends on what you are looking at. So if you are the investor that you have a higher risk tolerance level, okay, so meaning which you willing to pay slightly higher fee for a higher return, which you want to beat the market, so you go to unit trust fund. So while on the other side, like what Eva has been stressing on, which is if you are an investor that you don't like to do a lot of homework, you just want to track the index, or the underlying, so you just go for the cheaper entry of ETF. So to me, it is like another choice which complement each other.
I see. Okay, all right. Thank you, Ong. So now questions to Choo. All right. So just now you have shared, you have mentioned about market maker that is always standing ready to take up the purchase and also the redemption when it comes to ETFs, because they are all open-ended, similar like unit trust. Now, questions from the audiences: who regulates the market makers? Can we really trust the market makers? Is it really safe that I can always buy and sell back my ETFs? Would there be any volume issue?
Yeah, this is I think most like if you rank the FAQ, right, this is probably like the top of the chart, number one.
Correct.
So I think actually market makers are appointed by Affin Hwang or by any ETF issuer, and these people are generally your investment banks, or it could be brokers, or it could be any participating dealer. So these guys are ultimately either being regulated by SC or Bank Negara, and Bursa at the same time, depending on what entity they are, right? So let me just give you an example. Like for Affin Hwang, all our ETFs are market made by Affin Hwang Investment Bank, which is our parent company, and they are basically licensed by SC, regulated by SC as well as Bursa. So Bursa actually has some regulatory framework that guides market makers, in terms of their spread, quantity to offer, and the percentage of their presence in the market. So it's not like, suka-suka, they think that, hey, now it's not a good time to market make, they pull out from market making. So they can't do that. So they are regulated in that sense. So if you ask me whether or not can trust them, my answer to you is yes, because we actually sign a contractual agreement with the market makers. So if there's anything that they are trying to do funny or whatever, you can always, make a complaint, lodge a complaint to Bursa, to ourselves, and then, we will investigate. But so far, I've not seen, any misconduct per se by the market makers. Yeah.
I see.
And I think the liquidity, they are always there. So you want to get out, you can definitely get out. But of course, if you want to queue for a better price, that's when you may not be able to get out as fast. Yeah.
I see. All right, Choo. So we will come back to you later on some other questions now. So I would like to ask Shyu from Bursa. Are ETFs well received by investors in Malaysia? If yes or no, what do you think so? What are the main concerns that is stopping Malaysian investors from buying into ETFs that are listed in Bursa, Malaysia? Shyu.
Well, for ETF, as I mentioned in my slides, there's a huge potential market for it, but the investor awareness is actually relatively low. And therefore, that is the crux of the problem, right? Because if investors are not even aware of the existence of ETF, then the likelihood of investor wanting to invest in such products would be lower. That's why events such as this, webinars, education campaigns, and resources available on websites, and also other mediums are very important to educate members of the public on ETF. And as I mentioned earlier, compared with unit trusts that have a very well established distribution network like banks and agency force, ETF just doesn't have it. They just have brokers and platforms like FSMOne to distribute it, and that is something that we hope that we can grow in terms of distribution in order to make ETF more widely available to investors as a whole. And as covered previously by many of the speakers just now, there are much benefit to invest in ETF compared to, let's say, unit trust. And these are things that need to be communicated better so that investors are aware. I'm not saying that investors must invest or should invest in ETF. It's just that they should have the information available to them, and then they can make a better informed decision.
I see. All right. Thank you, Shyu. Now, question, to Ong. There are also some other questions asking that. Okay, so let's just make one example. So there is an ETF that is tracking the US S&P 500 index. Whenever the index make a gain, let's just say 5.0% last night, overnight, but somehow, how come in the next trading day in Busan, Malaysia, the ETF that is supposed to track the performance of the S&P 500 index, why is it not moving? Would it be able to explain this phenomenon in the markets?
Okay, so there are two parts on how we can look at this assumption. So technically, when I have an ETF that tracks a particular index, say for example S&P 500, so if they go up by 5%, like what you mentioned, theoretically it should go up by 5%, but generally you will not see the NAV reflect the exact 5%. There are slight difference. It won't be like I think like your assumption of not moving at all, I think may not be the case for the NAV, because the NAV will somehow reflect it, but it will not be the exactly the same, because when an ETF try to track an index, it will always be some differences, because this is what we call tracking error, because there will be a small component of cash component in the ETF funds, which we cannot 100% replicate or track the index perfectly 100%. It will be like 98% or 95%, 96%, depends on the structure of the ETF. So for the NAV, it will reflect somehow will be very similar, and also because of the fee component inside that, because ETF will have some fee component like the index fees, management fees, and all that, which will be deducted from the NAV on daily basis. So it will be slightly different. And the second thing that we can have generally from how the investor look at it is that the price, trading price, and I'm not talking about the NAV price, but trading price. When it comes to ETF, there are always two things that we need to look at. One is the NAV price and the market price, which is traded on the exchange. The NAV price may reflect the up by 5%, but as what you all know, that ETF is listed and traded on exchange. When traded on exchange, it simply means the market force, which is the demand and supply that decide the market price. NAV price can reflect the 5% up, but if all the market player or investors thinks that US market is going to drop soon, or tonight, because of up 5% overnight, and tonight, is going to retract back, to retrace back. So in this case, the market demand and supply will make will press the price down. Then maybe it will reflect only a 3% upside. So this is the scenario.
Now, so what you are trying to say here is there is a possible scenario where market could be going up, but at the end of the day, the ETF pricing could go lower because of market mechanism in terms of demand and supply in the markets, right?
Yes or no. It will be slightly different from the NAV price, but it won't go very far. You will not see the scenario like, the underlying index up 5% while my ETF price trading on the market down 5%. You won't see. The reasons is because they are always, like what Choo has mentioned also, they are always the market maker there, that they put the offer and bid very close to the NAV price. Because for the market maker, they are willing to take the shares or buy the unit that very close to, if there is trading slightly below the NAV price for them, because in long run they always buy slightly lower and sell slightly higher than the NAV price as a form of providing liquidity and also make the profit. So in this case, when the market go down very low, the market maker will see this as an opportunity, because there is an arbitrage, between the NAV price and the market price. And that's where the market maker or any other investors that will come in and fill the gap and take the price. So yeah.
Okay, thank you, Ong. That is a very comprehensive and also, and a very complete answers when it comes to addressing the issues when it comes to asking on the market makers how credible are they. So, Choo.
Sorry, Sherman, can I just jump in on Ong's answer?
Okay,
I think
sure.
other than the tracking, right, there is also another factor that investors need to take into account. The fact that, for example, if you're talking about S&P 500, the S&P 500 futures is actually traded 24/7. So even though the US market may close up, say 5%, but when the futures S&P futures is being traded during the Asian hours by the Japanese, by everybody else, right, then there could potentially be there could be some expectation that was built in that it will open lower and things like that. So therefore, the market makers pricing on that ETF could potentially be lower, mostly impacted by the S&P 500 futures trading at that point in time. Yeah.
I understand. Now, Choo, I know your answers are always very layman. Now, I think the ultimate questions is always is that, can the market makers take advantage of investors, or do they have to follow what is going on in the markets, because investors do not want to be exploited by the market makers? Would that happen?
So far, I've only seen retail investors exploiting other retail investors. Same goes to Warren, because like I said just now in one of my slides, I did flesh out that market makers are not there 24/7. So as much as they try their best to be there, they may not be able to. Like, for example, S&P New China ETF, right, is traded basically, Hong Kong shares, right? So Hong Kong only opens at 9:30. So between 9 and 9:30, our market makers are not market making. So, but you will see quotes between 9 to 9:30, and those are quotes by retail investors. On the stock market, there's this behavior of a retail investor, right? After I buy a stock or an ETF, I want to put in a sell order, and I may want to capture 10%, 20%, right? So I place a good tail date order. So this order will definitely pop up, right? So then end up investors will buy at a premium, and because they are not taking the market maker's price, then they were taken advantage by another retail investors. So which is why just now, in my slides, I also said, go to IOPV. Bursa Marketplace has provided you a very good informative data. So check the IOPV before you buy. So I realized it because my own brother asked him to buy, and then the next morning, 9 o'clock, he go and buy already. Then I realized, hey, why you go and buy at that time, So that's what I have been always telling retail investors to always take note of this point.
Understand. Now, I have questions towards you all right? So within AmFund's management product offering, there are ABF Malaysia Bond Index Fund together with FTSE Russell Bursa Malaysia KLCI ETF, which is focusing on the big caps. Now, would there be is there any plans from AmFunds to include small cap index ETFs? And what is the opportunities that you see within big caps? What is it so important to have, to consider this ETF?
Just for your information, the AmFunds is one of the largest ETF provider in the country. For example, our ETF bond funds our AUM is 1.6 billion. So that's a very substantial amount of money. So part of the reason why we are using the big caps at this point in time is mostly, number one, it's easier, it's more liquid. So for us to trade in and out. So obviously, at this point in time, we do not have concrete plans for other ETF. But obviously, if the demand is there, then obviously this is something that we will look at.
I see. All right. I mean, so with regards to Malaysia big cap and small cap, what are the so-called underlying opportunities within Malaysia big caps? Do you see? I mean, what is your stance? What is your views towards Malaysia banking counters? And also, I think a lot of audiences they also wanted to know is the so-called glove makers trend are still intact right now?
Oh, okay. The biggest component, let's say in KLCI, are the bank stocks. Like for example, Public Bank is probably close to 12% of the KLCI index, and Maybank is 9%. Right? We at this point in time we are positive on the banks, mostly because we think that the banks makes for very good recovery play, and a lot of the banks are trading at very good at low valuation. So generally, we think that the dividend payment is going to come through again. So we are comfortable with the banks. For Glove, we are less positive at this point in time. We invested in Glove, so we make a lot of money in Glove. But for Glove stock this time around, we suspect, again, it depends on how this COVID-19 is going to play out. But for the current information that we have, we believe that the ASP, the average selling price for Glove, is probably going to be trending down moving forward. So the earnings growth might not be as strong as what most people anticipate. Okay, but again, this is something that we are closely monitoring, so that if we see strength back in terms of the average selling price of Glove, then obviously this is something that we relook at our view.
Other than that, what is your views towards the plantation sectors? Because recently we saw rising commodity prices. Would that be beneficial for our local commodity counters at the same time?
Well, I mean, the straight answer is yes. I mean, higher selling price is good for planters. I mean, the current selling price of planters is about 4,001. Your cost of production for efficient planters is about 1,006. Your less efficient plantation company is about 1,009. So you can just imagine the amount of money that they are making. The key point is really, can this average selling price sustainable? We believe that we're still going to get not extraordinary. We think that the selling price is going to normalize going forward, but we will continue to see a very good price way above the production cost, right? So the key thing again to look at is the valuation of these companies, whether these are cheap, because the fundamentals is good. There's nothing to doubt, that these companies are making money. It's really, are we overpaying for it? So this is something we actively manage.
I see. All right. Thank you, Iwa. All right. Now, questions to Ong. Similar, I mean, also on the opportunities within the market. Now, we know that i-VCap, they're offering MY ETF, MSCI Southeast Asia Islamic Dividend ETFs. Now, this is available in Busan, Malaysia via FSMOne at the same time. So now, other than Malaysia, what are the other investment opportunities within the Southeast Asia countries? I mean, what is the exposure from these ETFs? What are the so-called returns? What kind of returns that investors will be able to expect from this ETF? What is your view from i-VCap?
Okay, so generally we are positive on ASEAN economy, like what I have shared just now. That ASEAN, especially the ASEAN 5 countries, Thailand, Indonesia, Malaysia, Singapore, and Philippines, were quite badly. Thailand and Indonesia, they were quite badly hit by the COVID pandemic last year. So we believe that when the market start to reopen, to recover, and the economy will pick up strong as compared to all other countries, and that is the value proposition that we are looking here, that this ETF, this ASEAN ETF, will give you the exposure to get into this recovery theme of the ASEAN. And also, if we were to talk about ASEAN economy, we know that this is a very young growing population, especially Indonesia. The population growth is still strong. That in longer run, and they will provide a very robust growth opportunity in Indonesia, and as well as for Thailand, because of the recovery in their tourism segment. And Malaysia, I think we already heard enough of Malaysia from all other analysts and fund managers. So this is basically our view. And specifically to just now, you mentioned our ASEAN dividend fund, that another features for this fund is for this ETF is also dividend focused. So in this low interest rate environment, we believe that dividend yielding company will be appreciated and have a very good prospects, going forward. In terms of what type of percentage or return or expected return, we don't really share this, because for ETF funds, it's not really within our control, in the sense that if I'm running an active fund, if you ask me, I will be able to, I will be more able to share.
Understand.
But when we are tracking an index, is the index provider that is the component index, component or the constituents in stocks in the index that determine. But what I'm trying to say is that while any sector that do better over the time, when the index get rebalance, all these good sectors will continue to grow bigger in terms of weightage in the index, and that is where the investor can get benefited.
I see. Now, I mean, thank you for your question. I mean, for your feedback. I mean, your response on the questions. Now, to ask you further, I realize that majority of your ETFs from i-VCap they are all Shariah-compliant, which contains the word Islamic. All right. So, if you are focusing on dividend strategies for these ETFs, right, while at the same time you also need to be Shariah-compliant, would it be missing out the opportunities within banking counters?
Okay, so the answer, this is a very good question. Okay, but first of all, I need to highlight this, that i-VCap is a subsidiary of Kenanga Investors, and i-VCap is Islamic licensed asset managers. So we only invest in products that is Sharia compliant. So on your question that whether we'll miss out, this is actually, we can look at it from both sides. When you are taking the positive side of one thing, you are actually exposed to the risk. Like for example, in last year, when during the pandemic, banking sector in Malaysia get a very strong hit. And that was the time that actually Sharia compliance in Sharia index has been outperforming strongly, actually not only in Malaysia but globally as well, because when the financial sector was badly hit, and Sharia compliance index, which doesn't have the component inside there, actually has been saved. And also the component proposition inside the index, the constituents, is also different. Like for example, last year, most of the Sharia compliant index, they have a very comparatively higher weightage in glove stocks compared to conventional, because of they don't have the banking sector. So it is replaced actually mostly by the glove stocks. And that is the reasons why it actually outperformed. So if you ask this question, it may not be, I will say that it may not be very fair if we look at, whether you have missed out something. Yes, of course you miss out something, but when you miss out the opportunity to grow, you actually excluded from the risk as well.
Definitely. Thank you very much, Mr. Ong. So I think the highlight of the answer that our audiences might be able to catch is that it has a higher glove makers compositions within your ETFs. So take note, yeah, everyone. Last year, right? Okay. So all right. So when you're talking about this, how frequent do you do rebalancing? I mean, how does it work? Because I would like you to share with our audiences how do you do rebalancing within the ETFs?
Yes, more than happy. Yeah. So generally for equity in index or indices, they will have rebalancing every quarter. So meaning which every 3 months, the index provider and the rebalancing is not up to the manager to decide what is inside, but it's already predefined in the index. Okay, so every quarter, the index will rebalance based on the criteria, like for example, market cap, when a certain market cap of the constituent stocks has grown, then, plus the liquidity, and it will be deserve for a higher weightage in the index. So that is how the index being rebalanced. And when the index rebalance, the ETF managers will follow through. We will do the rebalancing in line together with the index.
Would there be a lag? Would there be a lag, or it is instant reflecting the indexes?
Okay, so generally how we do is that we will do on the same day, because for ETF, if for the ETF managers, we know what will be the component pre and post rebalancing. The index provider will, when we subscribe to the index license, they will provide us with that information. So as ETF managers, we will prepare and we will do our rebalancing on the same day. And of course, it will be sometimes for the stocks that is slightly is less liquid, we may not be able to get exactly the same price as the closing price of the rebalancing day. But under perfect scenario, we will need to rebalance, meaning which we will sell some stocks and buy some other stocks, based on the new index after rebalance. So in the under perfect scenario, we will need to get it on the closing price, exactly at the closing price. But for those that slightly illiquid stocks or whatever, we will get slightly different pricing, but it won't run very fast.
Understood. Okay, all right. Thank you, Ong. Now, I think Choo, over back to you. I think personally, when I'm looking at the product offerings from Affin Hwang, I saw it the TradePlus Shariah Gold Tracker, because a lot of our so-called Malaysian investors, they are seeing gold as the perfect hedge towards market volatility. Now, a very tricky question. I might need your crystal ball. To tell us that is this a good time to buy into the gold ETFs? And this is question one. The following question would be, when I'm buying this ETF, because it is in gold, right, which is denominated in US dollar, am I also taking foreign currency risk at the same time? Choo?
Yeah, so I answer the second question first. Yes, whenever
Okay.
you buy the gold ETF, you will take foreign currency risk because gold is quoted and priced in US dollar. In fact, if USD strengthen, then it's better, like you get currency gain as well, right? I think the other question on crystal ball, I need to go into my prayer room, I think. go and pray first, see whether what God tells me. But jokes aside, I think for us, if you look at gold as a means to diversify, then you should always have gold in your portfolio, whether you are a gold bug or not, depending on yourself. So if you want to diversify, we think that adding a 5, 10, 15% of gold into your portfolio is okay, but bear in mind that gold is not a dividend yielding asset lah. So essentially you are just leaving it there. I mean, if you ask people like Buffett, he'll probably say, no gold to him, right? But gold has, year on year continue to give positive returns to investors. So for me, if you look at it from a diversification perspective, then there's no right time lah. Just buy it now. But if you are trying to time the market, then I would say you can rely on technical analysis, use whatever that suits you and has worked for you, and you can just apply those same technical analysis to time your entry and exit, if that's what you're looking for. But I won't be here to tell you whether buy now or not lah.
All right. Thank you, Lee Choo. Now, there are questions from our audiences are checking with us. What are the potential risks when it comes to buying an ETF from Bursa Malaysia? Now, I would like to hear this from Shyu, from a point of view from a regulator. What are the potential risks that investors should take note?
Well, from investment risk perspective, there will always be investment risk. So let's be clear about that, right? And in terms of market movement, it will depend on the underlying index that the ETF tracks. So these are things that is very similar to other form of investment. But because Bursa is actually regulated and it is the local exchange, the ecosystem is actually very well governed, and hence the risk compared to if you invest in foreign securities, remember, those parties and those companies are listed in the foreign market. So if anything happens there, your recourse, your avenue for getting back your money, this could be a long process, and it could be quite painful.
I see. Is there any websites or places where the Bursa has actually provided to the market so that they can do a more detailed or a thorough study or analysis when it comes to ETF in local space?
Oh, definitely. I mean, as mentioned in my presentation just now, we have a lot of information on ETF on Bursa Academy, and we have videos about ETF, the basics, and also additional insights. And if you go into the individual ETF, there's even research reports done on the ETF as well. So please go and try and look up all this material. And then on the Bursa marketplace, we also have live information on the ETF, the market prices, the performances, and these are things that you can actually access it and get to know more about the ETF that's listed on Bursa Malaysia.
I see. All right. Now, before we take, a few more last questions before we end these sessions. Is there anything where all the panelists in this room that you would like to add on? From your presentations, and also, is there any advice that you would like to offer? To all the investors today. Is there anyone who would like to volunteer first?
Oh,
if
yeah.
Not, all right.
Yeah, sure. If I may, yeah.
Yeah, definitely.
I think earlier, you were asking about two things. One is the dividends as well as the safety of the ETF, right? For AmInvest, we actually have a very big ETF for bonds, right? And this ETF basically tracks all the government bonds. It's called the ABF Malaysia Bond Index Fund. Right?
Correct.
So generally, this is a very safe ETF, because basically we just buy government bonds as well as quasi bonds, right? And the dividend return has been quite decent, right? Last year the dividend distribution was about 4.9%, right? So this kind of ETF is very suitable for investors who currently park their money in FD and who would like to get a better return, because I think FD now you probably get about 1.7% to less than 2%, right? So if you're looking for something that can, with a little bit more risk, but that can give you a better return, ETF like our bond ETF is actually a pretty good product to replace the FD, right? Then to add on to what Choo was saying, in terms of safety for all these ETF, the ETF we don't take the money from all these ETF. It's all being held by the trustees, right? So in other words, the safety net is there, and trustee most of the time are the banks, right? And the money in all these trustee are things ring fence, right? So in other words, There's no way we have access to the money and then we run away with the money, right? So investors should feel like there's really no, they don't have to worry about the money go missing. The only thing that they have to worry is about, if there's a big war in the country and everything goes under, right? Then you will make a big loss. But other than that, everything is the same as usual.
I see. Okay, all right, very good. Thank you, Yiwa. All right, so I think Li Choo, all right, I mean, as being the only lady in this panel discussion in this room, all right, I think I would like to to let you to have one last questions. To answer to all of our audiences today. Now, do you personally invest into ETFs? I mean, is there any shout out that you would like to make to our audiences today?
Yeah, I personally do invest in ETFs. So I've been conducted so many ETF talks that I every time we launch a new ETF, I'll put my money in, except for the leverage and inverse ETF, because those are trading products. So I basically have all the ETF that Affin Hwang launched, from gold to New China to Malaysian Momentum to Asia X Japan REITs. So those are the plain vanilla ETFs that we have, which I've personally put my money in, and I'm a happy investor. I think my advice to investors is really to look at, don't just listen to what people say, no liquidity, no volume, things like this, and make a prejudgment. Do your homework, go and monitor the stock market every day. Just take a look to see, have a feel as to whether market makers are present. And you can even try it yourself. Just put in, we're not asking you to, invest like 10, 100,000 into it. If you're not comfortable, just try out with a small amount just to test out the market to see if it's really if it does work for you. And I think, if you want to compare the US ETF and Malaysian market ETF, definitely we are very, very far away from them, but I think that's a direction that we all want to head to. And looking out may not necessarily mean the best, right? Even though they could be the cheapest, but at the end of the day, if you add on all your spreads to exchange your currency, and other costs, it may potentially add up to more or less about the same cost that you pay in Malaysia. Yeah.
I see. All right. Okay. Thank you, Li Choo. Wonderful. All right. So, as I look across all the Q&A among from our audiences and also participants today, I think apparently I can make there is a wish list. There is a shout out to all the ETF providers in Malaysia and also to Bursa. I think there is growing interest when it comes to ETFs that is specializing in semiconductor sectors, even cryptocurrencies. I'm seeing Bitcoin right now. Some of the other sectorial play ETFs. Those are the wish lists. Those are the so-called the feedback from the general investors in Malaysia. So all of you, please try to. We will need your help. To bring in more, product offerings when it comes to to complement the ETF markets at the end of the day. All right. Okay. So thank you everyone. Thank you all the audiences for your good questions. I think we have learned a little bit more, much more from from all of our panelists and also from the regulators itself today. All right. So with that, I would like to end my sessions. But please stay with us because there will be some sweet deals to be announced in our closing remarks. Please stay with us. Thank you very much. Thank you for joining these panel discussion sessions. Thank you. Thank you, everyone.
Thank you, everyone.